I'm going to give it a little time to let some participants, trickle in here. And let me kind of give, well, first of all, if you guys wouldn't mind in the chat box, let me know where you're from. Tell me what state you're from, what area you're from. I'm very interested in seeing, where people are from across the country. And while you're doing that, let me just kind of get through some logistical stuff before we get going here, and we'll allow some time to have some more people to trickle in. First, any questions you have, technical questions about taxes, about this presentation, if you wouldn't mind, put them in the Q&A box, because at the end of the presentation, we're going to have a Q&A session, and I'll go through and I'll try to answer every single question. But specifically, if you don't mind, put them in the Q&A box. Specifically, the chat box is more for logistical questions, such as, I can't hear you, the video's not working, things like that. But for any sort of tax-related questions, please put them in the Q&A box. Also, for watching this webinar, you get a discount with Collective. If you stay till the end, we'll give you a referral code that'll give you your first month half off. So, everyone likes free money. And if you wouldn't mind, encourage people to join the webinar. Post it on your LinkedIn, post it on your Facebook. The more, the merrier. And then first of all, this replay will be sent out via email in 24 hours. We can't share the deck. Specifically, we can't give a copy of the deck, but we will give a replay of this video recording in 24 hours. And then lastly, for any sort of webinar related inquiries, after this presentation, just send us an email to webinars@collective.com, and we'll get to it as soon as we can. And let's see where people were from. Castle Rock, Colorado. That's a very royal name for a town. Boston, Massachusetts. Welcome, Justin. Gainesville, Florida, and Miami, Florida. Okay. I'm actually in Sarasota, Florida. That's where I live. So not too far off. And Portland, Oregon. Jenny's from there. I actually, not too long ago, I took a vacation and I just went to random places. I essentially just, put my finger on a map, and that's where I was going to go. Portland, Oregon was one of them. And it was a good time. Raleigh, North Carolina. Yeah, my parents actually just moved over to Asheville, North Carolina. It's a beautiful area. Okay. Well, I think we have enough people to go ahead and get started here. So let's do just that. Here's the agenda. Today, we're going to talk about some basics, some self-employed tax basics, and why they're so expensive. What is an S Corp and how it helps you save money? Collective is an S Corp company, so of course we're going to talk about S Corps. Why start now with an S Corp, and how you get started with an S Corp. And then at the end, of course, we'll do some Q&As. First of all, just a quick word about Collective. We're the first all-in-one platform, online financial platform designed for people with small businesses. We'll handle everything for you. We'll handle your S Corp election, your payroll, your bookkeeping, tax filings. We're here to do it all. And also, this is just a cute little graphic here and explains your money when you're self-employed. You've got a lot of things to worry about. You have to set up your business. You have to have an accounting software like QuickBooks. You have to worry about estimating your taxes and paying them. You have to worry about actually, sort of sorting out your bookkeeping. And with all those things to juggle, when you need to make a financial decision, it's next to impossible without support. Really is. So obviously, you got a little bit of a frown on your face. But with Collective, all of that stuff is roped into one spot. What are you struggling with most right now? Sarah, I believe this is a poll question. I could be wrong, but if you wouldn't mind, if this is a poll question, yes, it is. All right. So we've got two questions here for polls. And the first is, what are you struggling with most right now? And are you thinking about switching to an S Corp? Interested to see what you say. I think let me make a guess. I think people are going to say bookkeeping. I could be wrong, but I always like to gamble. And just a reminder for any sort of questions, please put them in the Q&A box. So then they can all be organized in one spot. And at the end, I'll answer them for you. All right, we'll give a couple more seconds here. Okay, Sarah, you can go ahead and end the poll if you're able to. All right, let's see. Oh, I was wrong. Taxes. Okay, filing taxes are what most people are struggling with. All right, I was really wrong. I think I was in what, 4th place. Okay. Well, thankfully, we're going to talk about taxes, and we're also going to talk about the other concepts here too. And then in terms of, are you switching with an S Corp? It seems that about 50-50. People are either in or they're not in. Well, hopefully by the end of this conversation, you'll have a better understanding of S Corps and whether or not it'll be beneficial for your business. First, let's get into some basics, some federal tax basics. Let's talk about pass-through structures, okay? So most people, most self-employed people are one of these 4 sort of options over here. They're a sole proprietor, a partnership, which is just another word for 2 or more people on an LLC, or an S Corp. And just a few words about, pass-through structures. Businesses don't pay income tax. These businesses, in particular, sole props, partnerships, LLCs, they don't have a sort of business income tax. All profits pass through to the owner. It passes through the LLC, and it appears on the owner's tax return, their personal tax return. Taxes are paid on profit passed through the DIM, and there's no double taxation. There's no sort of corporate tax like you see in a C Corp, like Microsoft or something like that. Here are the taxes self-employed people pay. Income taxes, that's one big group. And obviously, that's what you think of typically when people think of taxes. They're thinking of income taxes. They're marginal tax rates between 0 and 37%. And these are the main tax rates you pay when you file your income tax return at the end of the year. But on the other side, people pay self-employment tax. And it's a flat tax rate of 15.3%. And, the name, it would imply that only self-employed people pay self-employment tax, but that's not the case, because self-employment tax is literally another word for Social Security and Medicare tax. That's what it is. It funds our Social Security and Medicare programs. And you pay self-employment tax, whether you're self-employed, have your own business, or if you're employed by someone else, if you're an employee. But the only difference, well, when you're an employee, the self-employment tax is halved up. You pay half of it and your employer pays half of it. Just by law, they're required to. It's almost like the government is, requiring them to contribute to your retirement. It goes to your Social Security. But if you're self-employed, you pay both halves. You pay the full 15.3%. And that's one of the reasons why it can be so expensive to be, a self-employed taxpayer. Well, let's talk about it a little bit more. Social Security and Medicare taxes, when you're an employee, are cut in half. And this example, I believe, is generally someone who makes around $100,000. The tax rate for the self-employment tax rate is 15.3%. So when you're an employee, generally speaking, that's $15,000 in taxes. Your employer pays half, $7,500, and you pay half, $7,500. But when you're self-employed, you pay the whole $15K. and it hurts. So here's a little example of how your net income works and how you're taxed. Net income, how you get that is you take your total revenue, the total money that you make, that every dollar that your business brings into its account that it makes, and minus tax deductions. And tax deductions really are just another word for business expenses. They're expenses that you can write off. Then you come to your net income. And that net income is either a profit or it's a loss. If it's a positive number, it's profit. If it's a negative number, it's a loss. Now that profit or loss, whatever it is, it flows to the owner's tax return. And on that tax return, the profits, the net income, is subject to the self-employment tax, 15.3%, and it's subject to the income tax. It's in addition to. It's not, they don't overlap, but you pay essentially both the self-employment tax and the income tax. First of all, what is an S Corp? Well, let's find out. Well, first, let's talk about legal structures. Before I kind of go into S Corps, I'd like to say a lot of people have sort of a misrepresentation about what an S Corp actually is. An S Corp is not a legal structure. It's not a business entity. It's not a corporation. It's not an LLC. It's a tax election. But things like LLCs and partnerships and things like that, they're legal structure. They're business structures, and they're formed with the Secretary of State. They're formed with your state of residence. They're generally required to file an annual report, kind of letting the state know who manages the entity, whether the entity is still in good standing, things like that. This is not a tax return. An annual report is just let the state know that you still exist. It's not filing a tax return. And the formation and information returns are done with the Secretary of State. This is a completely different group from the taxing authority, completely different group from the IRS. An S Corp is a tax election. It's not a business structure. So the IRS, what they do is they assign you a default business structure based on your business entity. So for example, let's say that the IRS assigns you a default tax structure, how you're taxed. So for example, single member LLCs are automatically taxed as sole proprietorships. You're taxed the same way as if you didn't even have an LLC as a sole prop. But with an S Corp, you're asking the IRS to tax your LLC under some different tax rules, under the rules of the S Corp tax election. And why are they great? Why would you even want to do this? Essentially, long story short, S Corps reduce the amount you pay in self-employment taxes. That's the entire reason why you'd want to become an S Corp. S Corp owners do not pay taxes. They don't pay self-employment taxes on their profit. But there is a catch. What an S Corp does, technically speaking, and by the way, an S Corp, how you do that is first you set up an LLC, a business entity like an LLC, and then paperwork is sent in to the IRS, the Internal Revenue Service, and that paperwork asks the IRS to tax you under the S Corp tax rules. But also what that does is that creates an employee-employer relationship between you and your own business. You would literally become an employee of your own LLC. You're still the owner. You're still listed as the owner, on the company formation documents. It's still your business. But for tax purposes, you are literally now an employee of it. So since you're an employee, you are required to pay yourself a wage. You're required to pay yourself a salary, just like you'd receive if you work for someone else as a W-2 employee. Payroll taxes is really just another word for self-employment taxes. That is what payroll taxes are. Now, the only chunk of your earnings that's subject to the self-employment tax are your W-2 wages. Payroll taxes are 15.3%, just like self-employment taxes. They are self-employment taxes. payroll taxes are Social Security and Medicare taxes. Half of the payroll taxes are withheld from your paycheck and half are an expense for your actual S Corp. So essentially what it means is half of the payroll taxes are withheld from your W-2 paycheck that you're receiving from your S Corp, and then the S Corp pays the other half. But the thing is, you're still paying the full tax rate because you are the S Corp. So we kind of already went through this, but this is how a sole proprietorship sort of tax structure works. But this is how an S Corp works in terms of taxation. You have your revenue up here on top, every dollar your S Corp earns. Then you have, from that revenue, you pay yourself a salary, and then you pay expenses. Payroll taxes are on your salary at 15.3%. Then after that, you have a profit or you have a loss once you pay your salary and once you pay your expenses. That profit or loss goes to the owner's tax return still. This is still a pass-through entity. And then also you pay income tax as well. You still pay income tax with an S Corp. Let's go through an example because I know it can be a little bit confusing here. So let's actually get into the numbers. Let's compare, a sole proprietorship or a single member LLC. They're the same thing in terms of taxation. And let's compare an S Corp. These, as you can see, these two businesses are making the same amount of money, but they pay wildly different taxes. Let's start on the sole proprietorship side. Client payments, the money your client pays you, obviously, it's $160,000. Let's assume you have $5,000 in expenses. Let's assume you put $10,000, back in tax-free retirement money. You now have a profit of $145,000. Another word for that profit is net income. That's your net income right there, 145 grand. With a sole proprietorship, you're not allowed to pay yourself wages. You're not allowed to pay yourself a W-2 salary. So self-employment tax is subject on that full $145,000. So, the self-employment tax here is $22,000. It's quite a hefty tax. Just something extra you have to pay. Now, and as you can see, your pass-through profit is 145 grand. That's your net income. With an S Corp, it's the same payment, same income level, 160 grand, same amount of expenses, same amount of retirement contribution, and same amount of profit. But the only difference is the S Corp owner is allowed to pay themselves a wage, an owner wage. And this individual, for whatever reason, decided that a $45,000 wage is a reasonable wage for this. And now the only chunk that is subject to those payroll taxes, the self-employment taxes, is that $45,000. So your self-employment tax goes down from 22 grand to 7 grand. That's a difference of $15,000. That's how much, just by changing your tax election, that's how much it can save you in taxes. Getting a salary is great, but how much do I pay myself? How does that even work? Well, here's what the IRS says. The IRS says the salary must be reasonable. That's really all they say about it. There is no set objective standard for what is a reasonable compensation. It's a facts and circumstance argument. So, but the best sort of strategy is to have a tax professional help you pick a number. It protects you. It kind of gives some professional guidance on a very important issue here. Because the problem is, if your salary is too low, if it's too unreasonable, the IRS could audit you. So it's important to have someone in your corner to kind of, make sure that you're doing the right thing. How does the money work? Well, this is how it works. First, you have your business income, of course. Then you have your operating expenses, your business expenses. And from those, and after that, you have payroll, the salary you have distributions. Distributions are the money, is all the money outside of your salary, on top of your salary. And that example earlier, when someone had a net income of 145,000 and paid themselves 45,000 in W-2, the rest of the money left are distributions to yourself. And also you have reimbursed expenses. S Corp pays, certain business expenses for you. Let's say that, you have an S Corp and you're working out of your home. The S Corp would actually reimburse you for some of the personal expenses that you have, and it can be written off as a business expense. Which one is right for you? How do you know which structure is right for you? Well, there's a few things to keep in mind when trying to decide, which is better, an LLC or an S Corp. LLCs, just to kind of start off, typically people start LLCs when they're new to business. When you're brand new to business, when you're new to business with very little earnings, if you're not making much yet, it's probably not a good idea to go forward with the S Corp. Just start off with the LLC, and hold off the S Corp tax election. And if you're earning less than 60 grand in profit per year, typically an S Corp isn't quite worth it yet. And also people that just want a simple, straightforward tax structure. They don't really care about paying more money to the government. They just don't want to deal with any of that at all. They'll go with the LLC. Now, people that might consider an S Corp election are people that earn more than $60,000 in profit per year. But that could mean, let me kind of back up a little bit. That could mean that you're a new business. You can still be a brand new business and make, good money right out of the gate. And if that's the case, you could consider an S Corp. So just because you're a new business doesn't mean that you need to, hold off on the S Corp. You very well could need to go ahead and get started with it. Also, if you want to maximize your retirement savings, an S Corp is an excellent vehicle for that. I've literally seen, certain individuals put back up to 60 grand in tax-free self-employed retirement. And also, if you have enough cash flow to make payroll runs, because you will literally be paying yourself a consistent salary. So you need to make sure that you have enough cash to be able to cover that salary to yourself. Why start now? That's a good question. Like, why would you not wait when it comes to an S Corp? Well, the reason is you get a full year of tax savings for 2023. That's why it's a good time to start. Your taxes and bookkeeping will be simpler, of course, and you'll start the new year with new money habits, going into 2024 with a fresh new perspective on money in your business. Getting started with an S Corp. It said it's not that hard, but it can be a little complicated if you do it by yourself. Thankfully, we got you. That's why we're here. Set it up, of course. This is how you do it. The first thing you do is you create an LLC. You actually have to be an LLC first before you can even make an S Corp election. So that's the first step. How do you create an LLC? You file articles of organization with your state. Typically, that's done with the Secretary of State. And you can typically do it online, go to the Secretary of State website at your state of residence, and follow the steps to file articles of organization for your LLC. Files other state requirements. There could be, other statements or files that you need to get done with the state. Oh, I'm sorry, files other state required paperwork. An operating agreement. An operating agreement is, a lot of times they are optional, but an operating agreement is a good idea to have because it's kind of like the legal backbone for your business. It lists who own it, their responsibilities, how the profits are divvied up, things like that. It's just typically a good idea to have, a legal document behind your business. Then you make the S election. After you set up the LLC, you make the S election with the IRS. You get an EIN, of course, with an IRS. This should really kind of be a little bit back, I would say. This should probably be under the LLC. You get an EIN after you form the LLC, actually. You can do that before you make an S Corp election. Then you file the S Corp election. You file that with the IRS. It's called Form 2553. Again, I would hesitate. I would urge you to not file that yourself and let a tax professional file it. Register for a payroll account. You have to, like with your state, since you're a W-2 employee, you have to do payroll registrations with your state. So that's another thing. Setup tools. You need bookkeeping. when you have an S Corp election. And the reason that is because, well, let me back up a little bit. When you're an LLC and a sole proprietorship, the bookkeeping software or any sort of tools like that are a little bit less important because, typically it's pretty easy. Typically, especially if you're a consultant or some sort of service-based professional, the bookkeeping isn't really that hard when you're an LLC. A lot of times you can, I know a lot of individuals that just kind of keep it on an Excel spreadsheet. But when you become an S Corp, it gets a little bit more complicated. Payroll software. You have to have payroll software when you're an S Corp because you're literally paying yourself a W-2 salary that has to run through a payroll software. Set up money flows too. Business bank account. You need that when you have an S Corp election. Business credit card. That's optional, of course, but sometimes it's a good idea to have. And how does ongoing operations work when you have an S Corp? Now that you have an S Corp, you'll be filing 2 tax returns. One is a business return. It's literally, when you make an S Corp election, a business return springs into existence like a Easter rabbit, and it's called an 1120S. You file that one first, and you still have to file a personal tax return after that. Payroll returns. Typically, there's quarterly payroll returns that you have to file as well. You'll need to maintain your entity, which is just another way of saying an LLC. You'll need to maintain your LLC to keep your S election in good standing. File the state paperwork every year. Sometimes it's every 2 years. It kind of depends on the state. And keep up the books and tax obligations, obviously. When you're an S Corp, it's a little bit more important that you pay your taxes on time and whatnot. So it's a good thing to keep in mind. Maintain your books monthly. With an S Corp, it's a little bit harder to scramble at the end of the year to get your books in line. They're just more complicated. There's more steps to take. So it's a good idea to maintain your books monthly. Pay estimated taxes quarterly. That doesn't really change when you become an S Corp. You still have to pay quarterly estimated taxes. And also, one of the most important things is ensuring that you're staying on a reasonable wage, and staying compliant with what the IRS says. Because if you're not, that could raise your risk for audit, unfortunately. Are you thinking about switching to an S Corp? I think this was a poll question, but we already answered it. It was about half and half. All right. How is an S Corp like on your own, without collective? There's a lot of things you got to juggle, some things that we've already discussed. You got to calculate your reasonable compensation. Who the heck knows how to do that, right? You have to have your own bookkeeping software. You have to set up your S Corp. There's ongoing state compliant. There's taxes. There's now 2 taxes you got to deal with. There's retirement advice. There's payroll. There's so many stuff. There's so much stuff. But when you have us, it's all in one spot. We support with all this. We provide support with all this kind of stuff. Your softwares are linked in with us. You don't have to pay extra money on softwares. You get ongoing advice. We'll file your returns. We'll set up your S Corp. We do it all. Also, good news, we're available nationwide, all over the country. There's not a state that we can't do business with. So it doesn't matter if you're in, the bustling downtown of San Francisco or in the, quiet mountains of Alaska. We are here and we can help you. Here's who we work with. Sole proprietorships, people that don't have an LLC set up yet, single member LLCs, or LLCs filing as an S Corp. In other words, S Corps. And then people that have $60,000 plus in self-employment profits. Here's what you can expect when you're first year with us. Business setup. We will set up your business completely, meaning we'll form your LLC. That's the first step in becoming an S Corp. We'll draft your operating agreement for you, get an EIN, file the S Corp election, do all that kind of stuff. Bookkeeping and payroll setup. We're also a full service bookkeeping and payroll firm. So we'll set up your bookkeeping tools, set up your payroll, and run your first payroll. And then, of course, we provide monthly bookkeeping and just general financial support. We'll categorize your transactions. We'll reconcile your accounts. We review your financial statements every month to make sure they're accurate, to see if we can find any sort of other deductions that could help you. We remind you to file, important state paperwork. And of course, we have a team of experts that you can message literally at any time to get some guidance on your business or just some financial advice. And then, of course, taxes. At the end of the year, we'll file your S Corp tax return. There's actually a mistake on here. So we'll file your quarterly payroll reports, of course. We'll handle your estimated taxes, and we'll also handle your annual tax preparation, your business returns. We don't handle your personal returns. And the reason that is because personal returns, they're just they could either be extremely simple to file, or they could be unbelievably complicated. And they're just too wide of a gap between complexity to where we just can't file personal returns. But thankfully, once you become an S Corp, your personal return will actually become more simple. It'll become simpler. Because previously, when you were a sole proprietorship or an LLC, all of the business information goes on your personal return, the Schedule C. So it's a lot harder to file because you have to, enter in all your numbers, you have to organize your bookkeeping. But when you become an S Corp, all of that information goes on your S Corp tax return. That's the complicated one now when you become an S Corp. And that's the one that we file. And then now with an S Corp, typically it takes people 5 minutes to file their personal return. And the cost, right? How much does it cost? There's actually another mistake in this deck. So it's not $299 a month. Oh no, I'm sorry. It's $299 a month if you pay in full for a 12-month period. But if you choose to go the month-to-month route, then it's $349 a month. And of course, there's a one-time $199 onboarding fee when you come on board. Okay. Also, schedule a call with us. Before anyone joins Collective, we like to have a conversation with them. So schedule a free call with a tax advisor, and hopefully we can have you join Collective. But even if not, let's say that it's not a good fit, you can still have a call with us. We'll give you some free tax advice. We'll point you in the right direction, and we'll give you some referrals to some people that can help you. Because sometimes, people aren't ready for an S Corp yet. It's not really in their best interest yet. And here at Collective, we'll only sign you up if it is in your best interest. We're not going to sell a service to anyone that doesn't need it yet. So, I would encourage you that even if you're not sure if you even need to be an S Corp, I would go ahead and schedule a call, certainly. And also, we have a special webinar offer. If you sign up, coming from this webinar, you get your first month 50% off. And the code is, as you can see there, it's SEPW12. Just give that to your advisor when you have a conversation, and you can schedule a call at the link right there. Or, of course, you can use the QR code. All right. Okay. Now it's time for a Q&A session. Okay. Here's the first question. If you receive an S election during the middle of the year, how do you address any payroll payments that could be made? Well, what Collective would do is when you came on board, we make the S Corp election, and we'd actually backdate it until July 1st of this year. So any money that you've made since July 1st onward, then that can be roped under the S Corp tax rules. And how that works is we will actually run back payroll. We'll go back and we'll reclassify some of your money as payroll, as W-2 income, and some of it as distributions. And that's how you save on taxes. But, as a Collective member, we'll handle that for you. You won't have to worry about it. Stephen has a question. I don't know if I'm eligible. On your initial screener questions, you ask, I think, annual revenue. Am I supposed to state all money generated, or do I need to remove payroll for the answer? Remove your own personal payroll. Just with an annual revenue, give us your net income, but don't include payroll. Don't include any money that you're paying yourself. Only include, all the money that you make minus your business expenses. That's really what that question's asking for. Bookkeeping, yes, but I'm stuck on the tax return too. Thankfully, we will file your S Corp tax return. I have a multi-member LLC. Me and my husband are the co-owners. We set up as an S Corp and use Gusto to run payroll. How can we utilize owner's draws or distributions? How do we determine what amount is reasonable to draw if I wanted to do monthly draws or a few draws throughout the year? Do we just transfer from our business account to personal? Yes, that's how you take an owner's draw. But really, the technical name for it is a distribution. That's how you take a distribution, is you simply transfer money from your business bank account to your personal bank account. And you can do that anytime throughout the year. You can do that monthly. You can do that twice a year. You can do that every week. It doesn't really matter. And really, you can think of your earnings in two buckets. One bucket is your W-2 salary, and that's the number that has to be reasonable. And your salary flows from your business bank account into your personal bank account through a payroll processor like Gusto, just like a check would. But your distributions, that's the second bucket of your earnings. And how you take a distribution is you simply transfer money from your business bank account to your personal bank account. And in terms of how do you determine what amount is reasonable, that's impossible for me to answer unless speaking to you. And you collective would have to take a sort of a deeper look at your situation, go through it, and then come up with a reasonable salary for you. Can you send out a copy of this recording once completed? Absolutely, we can. Can you help multi-member LLCs, or should I remove my wife and make it a single-member LLC to work with collective? Well, it depends. First of all, we don't work with partnerships, which are multi-member LLCs in certain states. But when it comes to spouses, when you have a spouse on your LLC, there's actually certain states where you live in, and the state just considers it a single-member LLC. That's just what they consider it, is that if you're married and you live in a community property state, states like Texas, I don't remember if California is one. I think there's a list of 12 states that are community property. And if you're in those states and your spouse is on your LLC with you, it's a single member LLC. So Dinesh, what I would do is I'd research online. Oh, and also you could just schedule a call with us and we'll go through, what state you live in, whether it's a community property state, and then we'll determine, whether or not we can work with you. So I would just, go ahead and schedule a call and we'll figure it out. Side hustle, notary loan signing business, currently set up as an LLC. It's just me and my partner and no employees. Small income of $10,000. Nope, I wouldn't be an S Corp. It's just not enough money to sort of justify the tax savings that you get from $10,000 from being an S Corp would be so low that it wouldn't be worth kind of jumping through all the hoops of an S Corp. So honestly, I'd advise against it. I have a 9-to-5 as well as a side business. How are you taxed? Are you double taxed? Well, you're not double taxed. No, you're not double taxed. You're not double taxed with the self-employment tax, in the sense that the self-employment tax is, like I said, it's Social Security, Medicare taxes. It's a flat tax rate of 15.3%. But the Social Security portion of that 15.3% is most of the tax rate. I want to say it's around, like 13% or something like that. That Social Security tax actually caps out at $160,000, somewhere around there, to where once you reach $160,000 in income anywhere, whether it be your business, whether it be you working for, an employer, whether you're a W-2 employee, once you reach that 160 grand, you don't pay any more Social Security tax above that 160 grand. So you're above 160 grand, it drops from 15.3% to around 3% because you're only paying the Medicare tax above 160 grand. You don't pay the Social Security tax anymore. So let's say that you have a 9 to 5 and you're at 160 grand at your W-2 9 to 5, but then you have a side hustle, and that side hustle is $100,000. The self-employment tax for the side hustle would only be 3% because you've reached the cap of the Social Security portion in your job. Now let's look at it a little differently. Let's say that you have a side hustle and you're getting paid $100,000, but then you have you have a 9 to 5 and you're getting paid $100,000, but then you have a business and you're making $60,000. You'd pay the full maximum self-employment tax because you reach that cap of 160 grand. Dinesh asked, Block advisors say they offer the ability to help with what is reasonable compensation. Does Collective do this too? Absolutely. We'll advise you on what's reasonable to compensate yourself with, what's reasonable to pay yourself with. How do you determine reasonable compensation? How much should I pay myself? I honestly have no idea unless I, kind of go through your personal situation. It's a facts and circumstance test. So how to come up with a reasonable compensation, you can kind of, there's a few things that come into play. You have what area of the country you're from, where you live, how many hours a week you work in your business, your level of experience in your industry, how much money you make in total. It all has to do with coming up with a reasonable salary. What is the income tax rate on this return? There is no income tax. The S Corp doesn't pay any income tax. Good question. Here's a great question. Are you required to take wages if your company is not profitable yet? We just started our business last year and are only able to pay the expenses at this time. No, you're not required to pay yourself a salary when the business doesn't have any money. So even if you have an S Corp and you have a loss, or if you're breaking even, there's no money to pay yourself a salary. So that's okay. Are distributions taxable? With example used, what would it be? Distributions are taxable. So the distributions are still subject to the income tax. That doesn't change. You pay the same amount of income tax. If I could get people out of income tax, I would be a very rich man by now, but you just can't. The only tax break you get from the distributions are the self-employment tax. And in terms of how much the income tax would be, I have no idea, because typically that has to do with your income tax brackets and whether or not you're married. And if you have children, the income tax is, wildly different between, between individuals, even people that make the same amount of money. It has to do with their personal situation. Is paying myself $22,000 when sales are over 200 grand in sales a year considered unreasonable? I have a decent amount of expenses of paying for materials, subcontractors for work done, and other gross expenses. The only way that I'd be able to answer that question is if I knew your net income, is if I knew, your actual expenses amount. Because just to be clear, $200,000, let's say that was your net income. Let's say that, 200 grand was after your expenses and everything like that. $22,000 is not a reasonable salary. That's extremely low. But let's say that you have a net income of $50,000. Then that $22,000 would be a reasonable salary. Typically, what the good rule of thumb, and this is not exact, it's just a rule of thumb, that if you keep between 30 and 40% of your net income, typically that's a reasonable salary. Typically, the IRS won't audit you. Now that's not set in stone, but that's just generally a rule of thumb. How do you pay into retirement when you are an S Corp? Well, it's really interesting. And what you're allowed to do is you as an employee, as the employee owner of the S Corp, you can contribute up to the individual limit into a retirement account, which is, depending on the retirement account, it's something like $20,000 or something like that. And then your business can dump money on top of that retirement account. So, you can catch up with retirement. And like I said earlier, I've seen people save up to 60 grand back in retirement. Can you start out as an LLC and then switch to an S Corp later? You absolutely can. You can switch to an S Corp essentially anytime you want. Do you mind walking through the tax calculation again? The comparison between the S Corp and sole proprietor taxation. Well, yeah, let me walk through that real quick. So let's just kind of do an easy example right here. And let's assume that, just to make the math easy, let's assume that someone makes, $100,000. Their net income is $100,000 in their business. Before you become a sole proprietor, or I'm sorry, before you become an S Corp, all of that $100,000 is subject to the self-employment tax. It's all subject to it. So how you come up with your self-employment tax would be $100,000 times 15.3%. It's the whole tax rate. With an S Corp, you're allowed to pay yourself salary. And salary is now the only chunk of earnings that's subject to the self-employment tax. So let's say that you again make $100,000 through your S Corp, but you pay yourself a $40,000 salary. Now it's only that first 40 that's subject to the self-employment tax, the 15.3%. The other 60 are your distributions. That's still your money. And that is not subject to the self-employment tax at all. So just kind of using that example between 100 grand as a sole prop and 100 grand as an S Corp, how you'd come up with your S Corp tax savings in this situation is you'd take $60,000, your distributions, and you'd multiply it by 15.3%, because that's the tax rate you're no longer paying. So what is that? 60,000 times 15.3%, like around it's $9,100. That example, if you're making 100K and you switch to an S Corp, you would save $9,180 in the self-employment tax. I thought it was too late to designate as an S Corp. I was told this from tax professionals. I already have an LLC, so I had to transition to S Corp. That's not correct. Now, technically, it will be a late election because the technical deadline is March 15th of every year. But thankfully, the IRS allows you to make a reasonable cause argument as to why you're filing late. So what we'll do is we'll come in, we'll send in the paperwork to the IRS, and we'll argue on your behalf saying, this taxpayer has a reasonable cause as to why he's, late on this tax election, give him a break. And all in all, a vast majority of the time, those are approved. But Stephen, what I'd do is I'd encourage you to schedule a call and, we can talk through your situation. Do you have to be an LLC? What if you are a partnership? Well, a partnership is essentially a multi-member LLC. So a partnership can still elect S Corp tax status. Absolutely. I am confused between an S Corp and a corporation. I would be shocked if you weren't. I don't blame you at all. These things are very confusing. And unfortunately, the IRS is not very good at terminology. They're just not. And I'm sorry, IRS. I'm sorry if there's any agents or tax agents on here right now. Please don't come after me. But the IRS is not good at terminology. And before I, kind of got into this business, before I got into this industry, I was confused too. I was confused, what does an S Corp actually mean? What's its relation to a corporation? I'm totally confused too. But think of it like this. An S Corp is a way to ask the government how you want your business to be taxed. So you can either be an LLC or a corporation and elect S Corp tax status with the government. And it'd make your taxes work exactly the same, regardless if you were an LLC or a corporation. Both of them can become S Corps. Both of them can make an S Corp tax election. But here's the difference. The only reason why you'd want a corporation as your underlying entity is if you would eventually wanted to go public, if you wanted to issue stock in yourself, if you wanted to have over 100 owners in your business. That's the only reason why you'd want that corporation structure. But the thing is, that corporation structure is more complicated than an LLC, and it doesn't provide any sort of tax benefits additional tax benefits, and it doesn't provide any sort of additional legal benefits. You don't get extra protection. Your assets don't get extra protection because you have a corporation. The LLC satisfies that. And since you don't get any additional benefit with a corporation, you get additional administrative work for no benefit. When you're a corporation, you have to, have a board of directors. You have to record meeting minutes. You have to do all that kind of stuff. With an LLC, you don't have to, even if you have an S Corp election. The S Corp has nothing at all to do with a corporate structure. It's a tax election. But if you are considered a professional in certain categories, you cannot be an LLC, but have to file as a professional corporation. That is absolutely correct. So it depends on your state, though. It depends on your state law. In some states, when you have a professional license, like if you're a doctor, a lawyer, or a nurse practitioner, people that have professional licenses, some states do not allow them to form LLCs, and they make them form professional corporations or professional limited liability companies. Those are called PLLCs. There's tons of states that do that, but those entities can still elect S Corp tax status. Derek has a question. Going from working for another employer as a W-2 employee to now being transitioned to a consultant with the same company. They're asking if I'll be invoicing them as an individual or business. I want to invoice as a business. So my question is, should I furnish my consulting services through and establish my LLC or an S Corp? Well, Derek, this is a perfect situation to schedule a call with us. We would love to go through your situation, just talk about it. But what I would say is definitely set up an LLC. That's the first step you should take, or that's the first step you should let us take, is set up an LLC on your behalf, and then we'll go through with the S Corp. But really, whether or not you want to make the S Corp election is, really depends on your income level. If you're thinking of making above 60 grand, then it's probably a good idea to make an S Corp election. But again, these things can be complicated. I would definitely schedule a call. Should the operating agreement from an LLC change or have to change when LLC gets reclassified by the IRS as an S Corp to reflect your now shareholder status? Yes, that'd be a good idea. Honestly, that anytime there's a big, structural change to your business, it's a good idea to update the operating agreement. Absolutely. Great question. Do I have to use a payroll service? I'm currently an S Corp and I just transfer the same amount to my personal account each month for salary. I file and pay quarterly 941s and annual 940s. Well, yeah, I mean, if you're handling all the paperwork yourself, you don't necessarily have to have a payroll service. Typically, people just find it a lot easier to do so. They don't want to juggle all these forms. But if you're sure that you're filing every form that you need to, then no, technically you don't need a payroll service. Can you pay taxes at the end of the year instead of quarterly estimated taxes? You can, but you'll probably get penalized. That's the only difference. They're not going to take you to jail. You're not going to be in tax jail or anything like that, but they could penalize your business. They could. So just keep that in mind. So the 1120S S Corp tax return determines your profit and loss from the business. And then that number still passes through to your personal taxes, right? That's correct, Rick. It still does. But it does in a little bit different way. So your profit and loss statement, like your income statement essentially, is now on your S Corp tax return, where previously that income statement was on your personal tax return. So what we'll do is we'll file your S Corp tax return, issue what's called a K-1, which is essentially just a W-2 form for your business. It shows, your salary, your profit and loss, your distributions. And you take that K-1 and you plug and chug on your personal tax return. It's extremely easy. So yeah, Rick, you're totally right. It still flows through to your personal tax return, but when you prepare your personal tax return, when you're an S Corp, it's a lot easier than it was previously. If you have family members on your board, do they have to claim anything on their taxes if they aren't on payroll? No, typically not. Not if they don't own the corporation, own a part of the corporation or anything like that. Typically not. If they're not making money, they're not claiming anything on their taxes, no. Is it absolutely necessary to start as an LLC? I'm a therapist, and in California, therapists can't do LLCs for some reason. Lori, that's a good question, and that's exactly right. Probably what California will require you to form, and I'm not really sure. It could either be a professional corporation or what I'm getting ready to mention, but they'll probably have you or want you to form a PLLC, a professional limited liability company. It's just a business entity that some states make licensed professionals form. So that's probably it. But the good news is you can still make an S Corp election on those type of entities. Unfortunately, collective can't work with them. Collective can't work with professional licenses. They're just a little bit too complicated in terms of forming the entity. It might even be a good idea to go talk to a lawyer to get that entity set up. But you can still make an S Corp election on them. As a single massage therapist, how affordable would it be to switch and trust collective with a goal of 100K a year with gross revenue? It completely depends on your net revenue. So let's say that your goal is 100K a year with gross revenue and your expenses are 10 grand. That's $90,000. That's well above the $60,000 limit. Collective would be a great fit for you. But let's say that you have a gross revenue of 100K a year, but you have $50,000 in expenses. That puts you at 50 grand net income. That's obviously below the 60K. It's probably better to wait a little bit. What bookkeeping software do you work with? QuickBooks? We actually have our own software. So if you came on board with us, you could cancel QuickBooks. And all the features that QuickBooks have, we'll be able to provide for you on our software too. Can you backdate an LLC if you have not yet filed a 2022 tax return? Yes, you can, Carla. That's okay. You can still backdate an S Corp election if you haven't filed 2022 taxes. Is there a benefit to having your spouse listed as the only employee in the company? Typically not, no. When you backdate and go back with payroll, I did that and got huge penalties for a late 941. Yeah, it just has to be done correctly. Like I'd have to look at your individual situation, but it's certainly possible to backdate an S Corp election without getting penalized. So it would be so it would be $399 and then half of the first month. No, my apologies. One of the slides was actually incorrect. Is the pricing of collective it's $349 a month if you choose to go that route with a one-time $199 onboarding fee when you first come on board. But when you pay in full for a 12-month period, collective gives you 15% off the total price. So that averages out to about $299 a month when you do it that way. What if I already started an LLC and been open for a few years? Will the rate still be the same? Yes, the rate will still be the same. And to be honest with you, people that have existing businesses are actually more work for collective, because when you come on board, we're just required to make sure that everything is set up correctly, to make sure that everything has been running correctly. So it's a lot easier for us to actually go ahead and start a new business than it is to take over an existing business. So yeah, your prices will stay the same. If you have S Corp election already as of January of this year, could collective work with you? Absolutely, yes. Is there a formula or a way to estimate what your dividends will be? Say I am making $350K and will pay myself $150K as W-2. Minimal business expenses. Well, yeah, I mean, at that point, if you're making $350K and you're paying yourself $150K, your distributions are just the rest of your money. So you're just in that case, if you're making let's assume you make $350K, you have 20 grand in expenses. Your net income is now $330,000. You have paid yourself $150K. So let's take 330 minus 150. That's $180,000 that are left in distributions. That's how much they'd be. I am currently in Georgia, so would open an S Corp in Georgia, but most of my incomes comes from out of the state. Does that affect anything? And what if I move back to California? Can I still use my Georgia S Corp? No, typically it won't affect much. Where you need to form your LLC is where you reside, where you live. And if you ever move back to California, you actually can still use your Georgia LLC, because what you can do is you can do like some sort of like foreign filing in California to just, let them know that you're there. And typically that keeps you safe from any sort of fines or anything like that. Can you set up as an S Corp for the new year going forward for 2024? Absolutely. I have not filed 2022 taxes. Is there any way to file it under a chapter S Corp? Typically not, no. Does Collective replace a payroll company like Gusto or Insperity? Absolutely. We'll provide all that for you. So when you come on board, you could get rid of your software, stop paying them, and we'll take care of it. How do you handle starting an LLC and S Corp in it today? Does the first 8 months continue to be accounted for with a Schedule C? Such a good question. Okay, so, well, with Collective, what we'll do, Chris, is we're going to backdate because we're making a late S Corp election, but we're going to backdate it till July 1st of this year. So you're exactly right that let's say that, you're an LLC and we do that on your tax return from January to June 30th, that would be your Schedule C on your personal tax return for 2023, absolutely. And then from July 1st to December 31st, that information would go on the S Corp tax return. So you kind of have two things going on here, but it's still typically worth it with the amount of money that you can save. All right, when taking a distribution, I'm understanding that the amount distributed is included in our personal taxes when we file yearly. Is there taxes that our business would owe on this at the end of the year when we file business taxes? Absolutely. That's a great question. But no, absolutely not. There are no sort of business taxes that are tax on distributions or anything like that. With an S Corp is a pass-through entity. So there's no corporate tax. There's nothing like that. I had a client meeting that I had to attend, and I just got on. Is there any chance that there will be a recording I can catch? Absolutely. Within 24 hours, we'll send you a recording of this presentation. Can you backdate an LLC if you're missing tax returns? Yes, you can. I can do S Corp for 2023 taxes if I start the S Corp anytime before the end of the year, or is there a timeline? There is a Collective timeline. So we'll only backdate your S Corp election if you join Collective before October. That's our deadline. So September 31st or September 30th, how many days are in September? If you join on that day, we'll still be able to backdate your S Corp election. But if you join after after September, then your S Corp election will start in year 2024. What should my LLC make at a minimum? You suggest to open the S Corp, $60,000 in net income. Instead of backdating payroll and then filing a late 941, do you just add it up and pay on the current 941? I don't really understand that, to be honest with you, Misty. What should I at least make a month to consider an S Corp? Well, you should make at least 60 grand in a year. So that kind of, what does that come out to? That comes out to about 5 grand a month in net income. But it also can ebb and flow. So let's say that, on 1 month you make 5K, and on subsequent months you make 10K, then the next month you make 2K. As long as you average out at least 60 grand a year, I'd consider switching to an S Corp. My husband and I are thinking about putting our short-term rental under our LLC. Would it be smart to elect S Corp for a biz like this if making 60 plus? No, it wouldn't. And here's why. It's a great question. Rental income is passive income, like rental income, stocks, investments. They are not subject to the self-employment tax at all. They're not subject to the Social Security Medicare tax. So there's no reason for a short-term rental or any rental properties typically to be an S Corp. Now, it's a good idea to put it under an LLC, but I wouldn't make an S Corp election on a passive rental property. When I registered my entity, I didn't choose LLC, and I selected S Corp when I got when I get an EIN. Is that right? If you are an S Corp, if you're currently an S Corp, then you should mark that. Oh, good question, Krista. Does the self-employment tax cap include household income? No, it doesn't. The self-employment tax is completely individual. So let's say that your spouse makes $1 million a year, and let's say that you make 100 grand a year. You'll still pay the maximum self-employment tax. It's completely individual. It's not by couple. Can you give an example of the quarterly income and state tax calculations if your revenue is not steady? Well, if your revenue, really, to do this, to the calculations, the estimated tax deposits calculations, that's simply an estimation. It's a pure estimation. So if your revenue isn't steady, you just kind of have to guess really what you'll make, throughout the rest of the year, and then multiply it by that, cut it into quarters, and that's your quarterly taxes. When you can't pay yourself a wage, how do you do the 941? You have to have a dollar amount to process the 941. How do you then let the government know it's zero income and you aren't not just filing the 941? This right here is why it's a good idea to have a payroll processor. It's extremely complicated, and the payroll processor handles it all. Is 60K a hard stop number? Well, you have to be, it's only if you expect to make at least 60K that I would, recommend joining Collective. So it's not necessarily a hard stop number. Like, let's say that if you join Collective and you're a little bit below 60K, or you end up a little bit below 60K, that's okay. It's no big deal. It's just that, you just won't save as much in taxes because you're, making a lower amount. But you'll still, have all your bookkeeping, payroll, and tax filings handled. Can you file Form 2553 anytime during the year and still backdate and take that year as an S Corp? And do you have to file the form by a certain time? No, you can actually file it anytime throughout the year, but it'd be a late S Corp tax election, and there's special steps that you have to take when you do that. So it's possible, but I'd encourage you to talk to a tax professional. My retirement account would just be savings at my bank, or who do you go through for a retirement account for me in a business? No, or you'd have to set up an official retirement account, like a SEP IRA, a solo 401k. That's business retirement, and it's locked in there. Like you can't sort of withdraw the money from it without being penalized. So no, you'd need to go to like a brokerage like Fidelity, open up a self-employed retirement account, and go from there. If you become an S Corp, can you go back to an LLC filing if you have reduced net income? Yes, you can. But the only problem with that is, though, if you do that, if you have a current LLC and you revoke your S Corp election, you can't elect again for another 5 years. You can't elect an S Corp tax status again for another 5 years. So it might be a good idea to just stay in S Corp election if you think that you'll, make money next year. I have a business that is an S Corp and I have rental properties. I have been told that I need to separate my rentals to a second S Corp. Would that be beneficial? I wouldn't put them under a second S Corp. I'd put them under a separate LLC. There's no reason to put rental properties under an S Corp because they don't pay self-employment tax. And the only reason why you'd want to form an S Corp is to save on the self-employment tax. So you're just going to have yourself a more complicated tax structure for zero benefit. Oh, this is a great question. What about the income tax that will have to be paid to the IRS, $60,000 distribution? Is this always taxed, even if the money is left in the S Corp and the money is not withdrawn? Yes. Even if you leave the money in the business account and you don't make any distributions or withdrawals, that is still subject to the income tax. Doesn't matter. There is no strategy at all to, leave the money in the business or anything like that. Does not matter one bit. You're still taxed on those distributions, regardless if you take them or not. Great question. I'm still puzzled by the tax savings. In your savings analysis, doesn't the S Corp still pay 7.65 as the employer, and the employee being paid a salary in the S Corp also pay 7.65, which still equates to 15.3%? You're still paying the same tax rate. You're still paying the 15.3%. It's just how much of your money are you paying that tax rate on? So when you work for someone else, when you're a W-2 employee, the Social Security Medicare tax is 15.3%. But it's subject on all of your money, all of it. So if you make 150K, you take 150K times 15.3%, and whatever number that is, you split it in half. Your employer pays half and you pay half. But when you're an S Corp, I wouldn't get too caught up in the S Corp paying money and you paying money. You and the S Corp are one and the same. So then the S Corp, let's say the S Corp makes 150 grand, and then you pay yourself 50 grand. You now are only subject to the 15.3% on the 50 grand, and the other $100,000 is a distribution, and you're not subject to the self-employment tax. But before you were. So that's the difference. To clarify, if my S Corp's net income is a loss, do I need to pay quarterly federal or state payroll taxes? That's a good question. Well, if it's a new business, no. If it's a new business, no, not necessarily. But let's say that you have, let's say that in the past, like the year previously, you made a bunch of money and you paid quarterly estimated tax deposits. If I want to say, typically they might even penalize you if you, well, no, I take that back. Typically, if you have a loss and you file your tax return at the end of the year, they typically won't penalize you if you haven't paid estimated tax deposits. Usually. As an S Corp single prop, can you take your income and not take a distribution at all and leave it in the company and rolls over to the next year? You could if you want to, Brenda. You wouldn't get any tax benefits for doing so. That money would still be taxed. I make 50 to 100K in income. I pay myself 3K a month, and my husband still works full time. We are in the financial industry and we live in California. Is an S Corp a good entity for us? We currently still sole proprietorship. I just went full time 2 years ago in business. Well, if you say that you're paying yourself 3K a month, which meaning like your net income is only 3K a month, I wouldn't go forward with an S Corp yet. That's just not quite enough money. But if your net income is over 60K, which means you're paying yourself at least 5K a month, then I'd start considering it. I'm a professional counselor that holds a state licensure. Does this rule me out from working with you? Unfortunately, it does. At this time, we're always growing, and eventually we might be able to take a professional license in the future. So you must have at least 60K in profit to bother with an S Corp. You'd need to have at least 60K in net income and net profit to bother with an S Corp. If you had 60K in gross profit, then likely you'll be below that 60K mark because you'll have business expenses. Did I just say that you do not work with PLLCs? Yes, Stacy, unfortunately, we can't as of now. We can't as of now. This is a great question. I sold my house in June and put the profits in my business bank account. Will I be double taxed on the income as an LLC? No, not if you file your taxes correctly, not if you account for it correctly. So really what that is you've personally contributed money to your business. You gave money to your business. That's not income, and that income isn't taxable. Now it needs to be, categorized correctly, in bookkeeping and, recorded correctly on your tax return in order to not pay taxes. Because, someone might think, let's say that an accountant was doing that for you. They saw, all that money coming into their business bank account. They might assume that that's income. So they might file it and pay taxes on that, but that's not income. Essentially, that is a contribution you've made to your business. And what that does is you are allowed to be returned that money through income. You can pay yourself that money back without being taxed on that money. Is there a discount for the collective services bundle of $349 month or annual if you don't need all the services? I do not need a bookkeeping service. Unfortunately, there's just one tier. There's not really a way to break it up. So distributions are only taxed as income tax. Absolutely. They're only subject to the income tax. They're not subject to the self-employment tax when they were previously. All your money essentially was subject to the self-employment tax previously. Is the $60K after expenses and my payments to myself and contract employees? Don't include yourself at all. Don't include yourself in this at all. Don't include any money that you're paying yourself. That's not a business expense. It's only after expenses and contract employees. Contract employees are business expenses, but you paying yourself isn't a business expense. $60K before expenses or after? After expenses. Will the IRS return taxes if you overpaid? Yes, they will. You'll get a refund. Does your price include everything that you offer, or are there extra charges? There are no extra charges whatsoever in any context, in any point in the relationship. Is it expensive to set up an LLC/S Corp? No, it's not. Now it's expensive for certain tax professionals to set up an S Corp. They'll charge an expensive fee, but it's not expensive to really set up an LLC. Typically, it's the average LLC registration fee for your state is around $100, something like that, and then there's no fee. There's no fee to the IRS to make the S Corp election. Can you repeat that? If the business has net profit at the end of the year, let's say $10,000, and no owner's distributions, so that 10K is left in the business account, that is subject to the 15.3% self-employment tax. Well, if this is an LLC without an S Corp election, yes. Like if you have $10,000 in net profit, then that is subject to the 15.3% self-employment tax. But if you're an S Corp, what you'd want to do is pay some of that in salary. So if you have 10K left in the rest of the year, or 10K left in the account, then you'd pay, let's assume that you paid yourself 3K in salary. Now only that 3K is subject to the self-employment tax. The other 7 is not subject to the self-employment tax. That would be your distributions. How are the tax rates determined? Will the W-2 and distributions be added and then a rate determined from that amount? Example, salary of 150K at 24%, distributions of 150K at 24%. Or they added and therefore taxed higher at 35% collectively. Yes, the distribution would increase your AGI, your adjusted gross income. So you have your W-2 salary, you have your distribution, and you'll get a total AGI on your personal tax return, added together, that will put you in a certain tax bracket. But those tax brackets are still marginal. So you only pay certain percentage rates on, blocks of income, chunks of that income. I am currently an independent contractor and would like to start creating passive income streams. Would it benefit me to start an LLC? Well, it depends on what you mean by passive. It depends on what you mean by passive. Like if it's completely passive to where, not much work is involved and it's sort of an investment sort of situation, that might not be subject to an LL or to the self-employment tax. Well, you're just asking about an LLC. Typically, yes, it's a benefit to start an LLC. If you're an independent contractor and you want to start side hustles, it's usually best to start an LLC. Are distributions only taxed when they exceed the initial capital contributed by the shareholder owner? Yeah, but that's true with all income. I mean, that's true with your salary. That's true with that doesn't really have much to do with distributions. That's simply you contribute, a certain amount of money initially, like you invest in your own business. You invest $20,000 in your own business, and you're just not taxed at all on the return of your, capital contribution. So you're just not taxed at all on that 20 grand. It doesn't really have to do with distributions or salary. All right, let me go through the chat box and see if we missed anything. All right. Let me see. Okay, as an S Corp, the net profit is taxed as both income and self-employment tax. Then the salary is only taxed with self-employment tax, and the distribution is only taxed as the income tax. Well, as an LLC, without an S Corp election, the net profit is taxed on both income and self-employment tax. But when you're an S Corp, the salary is only taxed self-employment tax and income tax. The distributions are only taxed the income tax. The distributions are not taxed as self-employment tax. I know that's a lot of words there, and I know this can be really confusing, but just think of it as you no longer pay self-employment tax on your distributions when you have an S Corp. I am an independent contractor working as a social worker, mental health counselor for a counseling service. I filed with the IRS as a sole proprietorship. I get paid for every client that I counsel and wanted to know if an S Corp is something that I should consider enrolling in. I do not have ownership in the counseling agency. It completely depends on how much money you make. If you're making enough money and you can afford a tax professional to make an S Corp for you, then yeah, I considered an S Corp. Are we able to get the recording? Yes, we will send out the recording via email. And it looks like and what about the income tax that will be paid on the $60,000 distribution? Is this always taxed even if money is left in the S Corp and not withdrawn? Yes, it's always taxed the income tax. It doesn't really matter if you withdraw it. And I believe that's all the questions that I see here. So that's it. I think that we did it. And I enjoyed this like I always do. I love talking to intelligent, self-employed individuals such as yourself. And like I said, this webinar will be sent out, in 24 hours to you. But in the meantime, please, if you think collective is interesting, if you think an S Corp might be advantageous for your business, schedule a call with us. We'd love to have a conversation with you. And regardless, we'll point you in the right direction, regardless if collective is a good fit for you or not. But I'd like to just, wish everyone a happy, what is today, Tuesday? Yes, a happy Tuesday. I hope you have a good rest of your week and keep being successful in your businesses.